Well, welcome, John, to another weekly meeting of Markmans on the Market. It's the week of March 26th. This is being filmed on a Sunday. How are you doing today?
Fantastic, thank you. I'm sitting here conversing with you on the other side of my screen. I'm watching the Dell the uh,
The Dell Open?
the Dell Open.
Yeah,
Fantastic.
my father-in-law is actually volunteering at that, Mark. I know an occasional guest writer for Markman Capital, but he's actually volunteering at that this whole past week.
They had to play 2 full games yesterday, and they have to play 2 full games today to finish.
It's a lot. Did you know actually Dell lost the contract for next year?
Yeah, I did. I think it's a shame. I really like this format, which is different than they usually do. Normally it's one guy versus the whole field. One guy versus 130 other golfers. In match play, you're only playing one other golfer. They do it just like the NCAA tournament. They have
Oh, that's
brackets.
cool.
So the quarterfinals, semifinals, and then after semifinals, which are today, they go right into the finals. So that's a lot of golf.
It's a lot of golf. Well,
But
it's also been a pretty big week in the market. I mean, the Fed, unsurprisingly and surprisingly to some, raised rates once again.
yeah, they raised by a quarter of a percentage point, which is more than a lot of people thought was necessary. Some people thought they needed more. I think a quarter percent was the right idea. See, if you don't raise at all, you're saying to the public, this is the banking crisis is real and it's horrible, and we've got to dramatically change the course of our ability to suppress inflation by doing something for the banking community. So the fact that they didn't sort of panic and do a zero, do a non-raise, I think was really kind of reassuring to the market. Of course, the market immediately rolled over and dropped 500 points between the end of the speech and the next day. But then 2 days later, they fully recovered. So it's been a really interesting. It was a very interesting week. Another
Yeah.
thing this week that's quite important is that we didn't have the world didn't blow up. I mean, by the world, I mean the stock market. If you recall, 3 weeks ago, everyone was in a tizzy about the blow up. This basically the elimination of Silicon Valley Bank as a company.
Yeah.
It was a signature bank in New York, and First Republic was near collapse.
Mm-hmm.
But then a week goes by, and the bankers did their thing, and the government officials did their thing, and we had a pretty bad week for Credit Suisse. But again, the whole banking system didn't collapse. And then finally, this week we had a lot of trouble with a company called Deutsche Bank, which is the most important bank in Europe, one of the most important banks in Europe. They had similar problems to what we've seen elsewhere in the world. And again, definitely trouble, but the Europeans, Americans, and the community, the banking community, came together and managed to forestall Deutsche Bank taking down the whole financial system.
Yeah, so
So
I had a question about that. Because obviously, First Republic Bank is down 90% since this whole thing. So it's 90% of its former glory. But the thing that kind of confused me with the Credit Suisse situation was it was saying that or Bloomberg was reporting that there was a government brokered takeover of Credit Suisse by the UBS group. And what I don't understand is what is a government brokered takeover and how is that not nationalization of a bank?
well, it kind of was, right?
Oh, was
So
it? Okay.
originally, Credit Suisse was only going to get $1 billion for their business, and they said like, take a hike. That's it's ridiculous. So UBS came in and ultimately offered them $5 billion.
Uh-huh.
Which is actually, I think, going to end up being the steal of the century, because the loans that they have outstanding are fine. It's just the level of their deposits had declined dramatically. So I think that you're going to see the UPS really stole Credit Suisse. You
So,
know, and
but
the other thing I want to, yes,
I was gonna say, but I don't understand that like what it's a Swiss bank. So is it if UBS is buying is UBS a government backed entity or
UBS is like the most important bank in Switzerland, maybe one of the most important banks in the world.
okay? So it's still then so Credit Suisse is still a Swiss bank.
Yes,
So is this government broker just mean that they were like helping the negotiation, like the European Union was just helping the
I think what you do is you
negotiation?
consider it sort of like a shotgun marriage. They
Oh,
forced Credit Suisse to come forward, and they forced UBS to do this deal. But UBS didn't really need that much persuading because the deal they're getting is phenomenal.
Okay, because I last week when it was South by South, sort of not last week, but 2 weeks ago when it was South by Southwest, I went to the ARK Invest talk with Kathy Wood, and she was speaking about this crisis. It just happened, but she had mentioned something along the lines of like the Saudis own a pretty large stake of Credit Suisse, but that they were saying no, we're absolutely not going to buy the bank, and she was postulating that it was because if the Saudis bought the bank and then there was or like gave them the funds and bought another stake in the bank that and if there still was this crisis that the European Union could come in and nationalize the bank and then the Saudis ownership is essentially meaningless.
Right.
So I just don't, so as long as it's another Swiss bank then it's fine basically.
But I mean, I don't think that the Swiss authorities were ever going to let, a Saudi Arabian bank or government entity take over Credit Suisse. That was just
Okay.
it was never going to happen.
Okay.
So they go, they looked around the world, and UBS has kind of meekly raised their hand. But once they got to look at the books and realize what they were getting, I think they're going to be very happy, and it'll be a big surprise for UBS shareholders.
Okay. So it's a solid move then.
So I mean, what I wanted to kind of point out was that you had this big crisis 3 or 4 weeks ago with banks in California.
Yeah.
California.
Silicon Valley Bank.
Exactly, and then you have a similar problem with Credit Suisse, and then you have a similar problem with Deutsche Bank. But then you look up and say, well, like, we were afraid of contagion. Remember that word we talked about a couple weeks ago? We were afraid that the loss of confidence in one bank would spill over to the loss of confidence in another bank.
Yeah.
And over into concern for the entire banking system, and would cause the entire market to collapse. That was where we were like 2 weeks ago.
Yeah.
And, we're like, you kind of look around and saying, hey, that didn't happen. Everyone sort of survived, and the Fed didn't have to do anything extraordinary. American authorities didn't have to do anything radical. So I think it looks kind of like we dodged the bullet. Did we really dodge the bullet? Well, we'll just have to see. But the way the market is looking right now, I mean, it looks as if investors are looking past this banking issue and looking forward towards, the announcement of first quarter earnings, which will start next week.
And this kind of leads into our next question. You're famous for saying that historically the best time of the year to buy stocks is end of March through April. Why is that? Is that because of Q1 earnings?
The best time is October through June.
Oh, okay.
But remember, back in May, I actually called the bottom to the very day. I said that October 13th would be the lowest point of the year for the S&P 500. And looking back, it still is the lowest point. But looking forward, I mean, this period right now between April and May is another really, really good time of year seasonally for the markets.
Why is that?
Why is that? I mean, because the market is made up of people, and people do the same things over and over again.
Oh,
and
okay.
And right now we're looking at, I mean, there's an old phrase in the market, sell in May and go away. Heard that one?
No, I haven't.
Sometimes it's true and sometimes it's not true, but it's firmly entrenched in people's mind. So the idea is that the market tends to peak there in May and then kind of goes dormant for the summer and then finally reaches a low point in October. I mean, we have like 125 or 150 years of research to make the assumption, that belief. But I think it's actually not very many years. I mean, you think about scientists looking at like global climate change. They talk about thousands of years or thousands of years at a time. Yeah. We're talking about less than 150 years of data. But anyway, the market just does tend to peak, in May. So what I really recommend is that here we have it's an interesting situation where people are thinking that from a news standpoint that they're supposed to be scared of stocks, and yet stocks themselves are doing fine. Last week was pretty good day and pretty good period for the market, in particular for technology stocks, which are our favorites and what we're best known for recommending.
Yeah. Okay. So those are
You
still
got,
pretty good options right now. And I'm
you
guessing
got,
that's why you're waiting. We've been waiting till this kind of period to add more stocks to our portfolios.
yeah, exactly.
That makes sense.
I mean, what we really specialize is helping people find an opportunity to take advantage of the riskier parts of the market, the risk part of their portfolio. So, I mean, I'm not talking, I think people should have most of their money involved in the stock market most of the time. But in terms of the risk piece of their portfolio, I think it's a little bit, came in a little cautious, probably a little too cautious. Because if you look at what's happening here, hold on a second, I got some numbers here. Would you like to know what the best stocks are in the S&P 500 for the year?
Yeah, I would love
Number,
that.
number one is NVIDIA.
Okay, which we added our portfolio a week or two
And we
ago.
had just a couple weeks ago, it's up 14%. But over the whole year, NVIDIA is up 83.2%. The second best stock
Wow,
in the market for the year is Meta, META. That's the old Facebook. It's up 71% this year.
that's
Tesla's up
surprising.
Tesla's up 54%, and AMD is up 51%. So, what I'm saying here is that the riskiest part of the market is actually doing extremely well this year.
Yeah, it's
And,
basically all tech companies too.
if you ask the average investor, like, hey, how do you think tech is doing this year? They probably say it's doing terrible, but it's just not. It's doing extremely well. Even an old lady like Apple is still up 22% this year.
That's kind of crazy. I guess there was a huge market correction at the end of last year, but still, that's a lot. I'm surprised. I guess the market does respond well to the news of layoffs, though. So that's probably where the meta thing comes in.
Exactly, and Nvidia is up because of the frenzy over artificial intelligence. The new chatbots like GPT-3 and GPT-4.
Yeah, I mean those are pretty crazy. I don't know if our viewers have played around with those at all, but I highly recommend that they do. ChatGPT 4 is a crazy tool. It's almost basically a personal assistant now, where it can do things for you and automate things. And I actually saw something today. You could have a Siri on your phone. Basically, you could replace it with Chat GPT, so you could actually have like a usable virtual or a voice assistant, which is pretty cool because Siri sucks.
I mean, it's pretty interesting, isn't it? I mean, this whole artificial intelligence deal, the rise of artificial intelligence because of the successful launch of GPT by OpenAI, which is a company in Silicon Valley. It's really kind of caught people by surprise. They shouldn't really be surprised. Artificial intelligence has been getting better and better in the background for years, but the release of GPT-3 and 4 has really fired up people's imaginations about what a different world we could be living in 5 to 10 years from now, or even next year.
Well, I think it's crazy is because like yeah, it's been working in the background, but until it's actually done and deployed, like the average person is not going to see it. It's not like we're looking at OpenAI like, oh my God, they have 500 blocks of code done. At 600, it's going to work. We're so close. Because like until they get to that like last block of code implemented, it's not a usable product. So
Right.
it seems like it came up out of nowhere.
Well, the thing is, Nvidia is the bomb. That they are the best stock for if you believe in the AI
Hmm.
revolution. They've got they have been working on. They were known as a graphics chip maker. Of course, they made their bones. They made their first wave of money by being the top provider of graphics cards
Hmm.
for PCs. But their CEO Jensen has been brilliantly steered the company into AI starting about 10 years ago, and so even though they're known as a hardware company, it's their software in AI that's really driven this stock forward. And I think
Oh
it still
wow.
has. It's expensive, but when you have the most expensive, when you have a darling like that, it can be overvalued for many years.
That makes sense, and that's why we're keeping it in our portfolio for the foreseeable future.
Yeah, well, I've been recommending NVIDIA for at least a dozen years, but most recently in our tech newsletter, Strategic Advantage, we added it because it pulled back significantly, and I think we're getting the benefit of the pullback now.
So one thing I don't really totally understand, and maybe you could help explain this a little bit, is we have a fear, we have the fear of an upcoming recession, right? But the stock market's still going crazy. It's still going up and up. Are traders just living in a different world than the future world, or is the fear of a recession not a real one?
I think that the fact is that investors think that the Fed has it under control, that if there is a recession, it'll be relatively short, not a crash landing, but rather a nice slide into the hangar and to be refilled with food and people, and off it goes again.
So what do you think though? What's
I'm
your
not sure what my metaphor is right there. Oh, no,
yeah?
I think no matter what I say, it's going to be wrong. But
Fair enough. Well, you feel free to change your opinion next week.
I suspect, based on market behavior, that the Fed is going to pull a miracle and land the economy into a soft landing, and that'll last a very short period of time, and then people and companies will recognize that while inflation was 2 years ago, it's been getting better over the last year and a half, year to 9 months to a year, and that's going to continue to improve until down under the 2 to 3% level that the government that investors want to see.
So it's the rare case where we might quote you as saying that the Fed knows what it's doing.
Yes, it's the rare occasion where we may look back and say, "Wow, the Fed finally got it right."
Because I know you've told me before about a couple of different scenarios where you can always bet on one thing, that the Fed normally doesn't do the right thing. But
well, I mean, imagine that you're in charge of the entire world economy. The guy had a bunch of PhDs sitting around a table. That just doesn't seem like they could get it right, and they usually don't. But I think this time they might get it right.
So that'd be great. That'd be welcome news.
I have to tell you a joke I got from GPT-4.
Yeah.
Why did the banker quit his job? He lost interest. Seriously, I got that from GPT-4. I said, "Tell me 5 banker jokes." And I hate to tell you, but that was the best one.
That's pretty funny. I mean, yeah, it is pretty funny. Well, speaking of good news, we had a pretty awesome trade this week in tactical options with Apple.
Yep. Yeah, we had a great trade in Apple last week.
I mean, up 40%. Ridiculous one day buy and sell.
Yeah, we're really happy with the way tactical options has worked out. If a customer did all of our trades in tactical options, this from April 1st of last year to today, they're up about 30%, 40%.
Yeah, it was about 35%, and then the market in the same period was down 10%.
Right. So think about that. Instead of being down 15%, people were up 30%. That's a fantastic delta. And I think that we're really proud of that, and we're looking forward to doing more of that over the rest of the year.
Yeah, that was a lot of fun. Then also for all of our other subscribers hearing this, we did have our first BOM only subscriber on Thursday, and almost everyone showed up. That's a BOM subscriber, so it was a big happy family, big community. Thank you all to those BOM squatters who came out and participated. We had a pretty awesome call, and if someone wants a little bit more of an intimate conversation with John, join that BOM squad, and next quarter you can join in on that call as well.
It was so awesome. It was great to see people's faces, and people asked some great questions, and it was just a lovely opportunity to interact with our customers.
Yeah, I really, really appreciated it, and the amount that the fact that everyone scheduled time in their day to come join us during that call was a real magical moment. So thank you to everyone there for that. Well, this has been another week of Markmans on the market. Thanks for turning in. This was filmed on March 26th, so it will come out on the 27th. Thank you all. We'll see you next week.
Hey, take care. Thanks very much.
See you.